Question number 2. Hancock operates a number of bakery stores in Melbourne. Selected accounts of Hancock Limited have been extracted and their balances are at the 30th of June 2015, or the financial year ending 2015. And it gives me a list of accounts and some of the balances. Now we've got some additional information here. It says the profit for the year ended the 30th of June amounted to $86,750. The market value less the cost to sell the inventory was $92,500, and Hancock Limited decided to transfer $35,000 from retained earnings to the general reserves on the 30th of June 2015. Alright, the company also declared a final dividend of 20 cents per share on that date. Okay, so this is not included in the information above. And now I'd ask prepare a fully classified liabilities and equity section of the balance sheet for Hancock as at the 30th of June 2015. Now the easy thing about this is pretty much everything that's a credit needs to be included. And there will be some exceptions though. Okay? And the debits you've got to look at and go, are they actually going to be included in my liabilities or equity section? So let's do a quick classification. We need to classify assets, or let's call current assets, non-current assets, current liabilities, non-current liabilities and equity. Okay, so there's my classifications. Now what would I normally classify my accounts payable as? Current liability, yeah. What about accounts receivable? Current asset. Accumulated depreciation of equipment? Yeah, negative non-current asset, I'll agree. Cash at bank? Current asset. Dividend payable? Current liability. Equipment? Non-current asset. General reserve? Equity. Interim dividend? Equity, yep. Inventory? Current asset. Long-term bank loan? Non-current liability. Provision for long service leave? Non-current liability, yep. Retained earnings, opening balance? Equity. Revenue received in advance? Current liability. And share capital? Equity. Alright, so we've got a few that we can tick off straight away because we can tick off my accounts receivable, my accumulated depreciation, my cash at bank, my equipment, my inventory, and there we go. So there's some items that I've just ticked off because we're only preparing the liabilities and equity section. So I don't have to worry about my assets. And now what we want to do is now prepare a liabilities and equity section. What's the first thing I need to do? Normally, at the 30th of June. Oh, hang on a minute. Before I do that, what about these items down here? Where do I classify my profit? Ooh, is it? Really? Is it income? I thought revenue was income. Profit is equity. Remember how we put profit into our equity section of our income balance sheet? What about the market value less cost of inventory? Do we have to worry about this? No, it's an asset. Decided to transfer $35,000 from retained earnings to general reserves on the 30th of June. Okay, so that's an equity one. And the company also declared a final dividend of 20 cents per share on the 30th of June. Equity. So how much is that, 20 cents per share? On 300,000 shares, that'll make $60,000. Alright, so that's an equity as well. Okay, so if I'm going to declare a final dividend, I've got an interim dividend of 35,000. I've got a final dividend of 60,000. So that's going to be plus 60,000 equals $95,000. Okay, so that means I've taken care of that. And I'm going to transfer 35,000 from my retained earnings. So my retained earnings balance at the first of the start of the year was 75,700. And I'm going to transfer 35,000 from there. I can probably do that in my... And the market value, so I can tick that one off. And my profit for the year was 86,000. Okay. All right. Where's my general reserves? My general reserves 54,000, and I'm going to transfer out 35,000. So my general reserves are going to be plus 35,000. I'll just make sure that I know that's all added together. And my, where was it? Where's my retained earnings? So my retained earnings here becomes minus 35,000. Okay? So let's just do that calculation. That will make it 40,700. And this one will be 89,800. Okay, so they're the figures that I want to include. So I'll just highlight those. And that then takes care of my two other items. I've still got my profit that I've got to include somewhere. Okay. So what's the first section we need to put in? Is my current liabilities. Now, my accounts payable will be a nice one to first. So my accounts payable, I'll tick that off. Actually, I'll tick it off this side. It's 32,560. Do I have any more? I did. Revenue received in advance. $3,600. Any others that I need to include? Dividend payable. Where's my dividend payable? 35,000, is that all? Plus this 60,000? Equals 95,000.
You had added the 60,000 to the interim dividend.
Did I? Yeah. I've already done it? Interim dividend, hang on. Dividend payable. Yeah, so my interim dividend is, so my two entries will be here. So because it's still payable, because it's only declared. So not only does it increase the dividend, which decreases my equity, but it increases my payable. Oh. So if we were to do the journal entry, I'd be crediting payables, and I'd be debiting dividends. So that'd be my entry. So that makes 95,000. Can someone do some quick calculations for me? Yeah, total current liabilities. What do we get? 160, 9800, 31. Is that what I get? Is that right? Well, maths might not be too good this morning. So, non-current liabilities. Alright, so what's my non-current liabilities here? Hang on, dividend payable. I'll tick that one off. Non-current long-term bank loan. Long-term bank loan. Which is 55,000. And then my next one is provision for long service leave. Which is 13,500. Is there any others? Doesn't look it. Equity. Okay, so that gives me 68,500. So total liabilities would be the sum of these two, which makes 199,660. I'm just going to pin these pages together because this seems to happen the more I write. The pages curl up. Okay, next section that we've got is equity. Now the first thing I need is my share capital. And how much is my share capital? It's 1.5 million. Pardon me. Next thing I'm going to put in is my retained earnings. Which is 40,700. I'm going to add in my profit. My profit is 86,750. I'm going to subtract my dividends, and my dividends were, hang on, retained earnings, interim dividend 95,000, so I'm just going to call that dividends. So that's 95,000. And is there any others? Yep, general reserve. And my general reserve was 89,800. Does that cover them all? Tick, 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 tick. Yep, all those are done. Alright, so how much do we now get? Who can do a calculation there for me? Should be 40, 700, 1550, 2350, 750. Alright, someone's, oh actually, I've got my own calculator. Don't have to rely on anyone. Plus 9 less 95. So we've got 122,250, which will make it 162,250. And there you go. Now, so you know the marking scheme. Each tick is worth half a mark, okay? Let's just do that. Half a mark. Alright, so we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Oops, there you go. So there's your marks. That should all add up to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 18. I've missed something somewhere. 19, 20. There you go.